Welcome to Markets Now. I'm Michelle Rook with Kent Beadle with Paradigm Futures. The grain trade starting off lower this morning. We're still lower except for the hard wheats, and over in the livestock futures, mostly higher. Kent, let's start off with soybeans. Soybean meal making new contract highs last week, but today down hard. Is that why we are seeing soybeans pull back, or is this South American weather?
Well, soybean meal is the leader of the marketplace right now, and you had an almost parabolic type rise here over the past 3 weeks in value of soybean meal futures. It's being tied to an inability of either Brazil or Argentina to satisfy demand that has been showing up, and a lot of that demand is moving back to the U.S. And so, things are getting tight here. Now, when you have parabolic moves like the one that we had, you're going to get corrections. You're going to hit prices where end users are going to say, gee, this is a lot more expensive than the last cargo that I bought. I wonder if things might not come down a little bit. And when you run into some areas on the charts like we are right now that we've been to before, but we haven't stayed there very long, it just doesn't surprise me that we might have a back and fill sort of correction. And given the fact that meal's been the leader to the upside for the soybeans, this back and fill in meal is certainly a little bit bearish for the beans themselves today.
Not only that, but we didn't get any confirmation of China business. And certainly there was a lot of talk towards the end of the week that China had washed out of Brazil beans, had bought U.S. beans, right?
That's correct. We've heard 9-10 cargoes potentially, and the question becomes, did they wash out of Brazilian purchases so that they could buy U.S., or are they just is their demand base somewhat smaller, and not seeing those daily flashes for those cargoes kind of makes traders a little bit nervous that maybe the demand is not there. I would look at it and say, we've had some awful strong gains in our export market as of late, and I'm not sure that we're necessarily going to see the those daily sales come right away, but we might ultimately see them as long as we get something here in this week's export sales report, or maybe the following weeks. I'm still optimistic that we might be doing some of that business.
Sure. What about corn? We're down there today. Is that lower crude oil or the lower Chicago wheat futures?
I tend to think it's the lower Chicago wheat futures, or that are hurting us to begin with. I think it's a little bit of both. Chicago wheat hasn't made new contract lows like Kansas City, but it has been trending lower over the last couple of weeks now, and it's been exhibiting a pull on corn. Obviously, we're starting to get down to that area where we start to wonder if we might not be able to substitute some of this cheaper soft red winter wheat into the mix. But I think it's also the crude oil. If we take a look at what happened last 2 weeks or the last week and a half, we made our highs in corn the same day that crude oil touched $90. And as crude oil moved lower a week ago Friday, and then through most of last week, every day the crude was down, the corn was down as well. And I think crude oil lost about $7-8 a barrel over the same period that corn lost about 30 cents a bushel. So crude being down $2.50 to $3 today certainly exerts a little bit of pressure on corn as well.
Yeah, plus harvest pressure perhaps, and then again, South American weather. We're watching it in that market too, aren't we?
Yeah, and in general, the South American weather forecasts look somewhat favorable. I mean, there is rain in the forecast for the drier areas in Brazil. There is rain in the forecast for parts of Argentina. There's probably still too much rain in the forecast for southern Brazil, and those areas are going to need to get a break here one of these days if they're going to be able to get finished planting, and if they're not going to have adverse impacts from being too wet. But The northern Brazil weather is kind of interesting because obviously Mato Grosso is a very large area, and that there has been some rainfall, but I think it's been somewhat spotty. And certainly there's plenty of evidence in social media that there are areas anyway where that crop has not emerged very well, that there may need to be some replant. And we saw just this week that the pace of planting in Mato Grosso is actually slowed and is now behind year-ago levels when it was ahead. So the weather that they've had till now is starting to have an impact. And of course, that could have an impact both on yield and then, quite frankly, it could have an impact on the number of acres of safrinha corn that we ultimately plant here as we get later in the season.
Yeah, no doubt. So I mentioned wheat started off lower this morning. Kansas City wheat hitting some 2-year lows and has kind of bounced. But when you look at the wheat market, there's really nothing bullish there. There's no catalyst for a rally, is there?
There's fuel for a rally, and that fuel is the large speculative short.
Yeah, no doubt.
The size of that spec short across all three contracts is close to 150,000 contracts between Minneapolis, KC, and Chicago. I think the record is about 180,000 contracts. So it's a very big short, but they do need a catalyst in order to start to cover that position. And they just haven't had one yet. The problem is you do have production issues in Australia. You do have worries about some production issues in Argentina, but we continue to get offers out of Russia at lower levels. We continue to see boats being loaded out of Ukraine, and we thought that might come to an end when the export corridor closed this summer. But the Ukrainians came back in and said, no, we're going to sponsor our own corridor and try to enforce it with our own Navy. And so far, they've gotten approximately 30 boats out of there. Their export totals are still down, I think, over 30% year to date. But, they are getting boats out of there, and that's just kind of kept the wheat trade very satiated with enough bushels between Russia and Ukraine, at least to date.
Cattle market is up, kind of an impressive way to finish out the week last week, closing above chart gap areas on the futures and some improved cash. I guess the key now is we're higher today, but can we keep it going?
Well, I think what we want to do is see if we can find support on weakness. And, we had a great technical week in December futures. There was massive support at $182, which of course we blew through last Monday. But, the good cash trade that we had occur over the course of the week allowed those futures to get back and close above that area, left a huge selling exhaustion tail on the candlestick charts and closed above support. I thought it was very strong technically. And so trading higher today is not a surprise. We're probably going to have a lower day at some point, maybe tomorrow, maybe later in the week. And if we can continue to hold that support, that's going to look good technically and ultimately could help propel us to some higher numbers.
Yeah, well, we'll see what cash does and if that gives us any help this week as well. Hog market today, fourth day up. Are we trying to bottom?
Well, certainly there's a significant bottom that seems to have formed. We did have a reversal higher in June hogs last week. The December contract didn't make a new low, but it did close higher. It was a decent week. I'm actually still thinking about seasonality and the fact that we're not likely close to our seasonal lows in the cash yet, making me think that this is probably a rally that hog producers want to sell. But the technical reversal higher in the June certainly was good. And the big thing, of course, is the discount that pork has to beef right now. And with the beef market being able to regain a lot of its losses last week, starts to make pork look a little bit cheap. And, we're definitely seeing some support for that reason today.
Absolutely. All right. Thanks for joining us, Ken Beadle with Paradigm Futures. That is Markets Now.